now is the time to patiently wait for a pullback. And as if August, September, and October, you'll see a strong support form, then you can take opportunities of that. Because overall, I would say based on all these factors I have just shared earlier, potentially markets still have room for a year-end rally if let's say there is a dip in all these August or September or October. Okay, good afternoon everyone. It's end of the month again and welcome to our monthly market updates for Busy People series, where we'll get you up to date with the global stock market while you're having your lunch. I'm Chye, a financial market analyst and coach at Beyond Insight, and this is your express session to get up to date with the stock market. We'll cover the market highlights, major stock market indices performance, and also the upcoming potential opportunities and also risks out there. All right. And we'll wrap up the session with Q&A later. All right, so are you guys ready? If you are ready, you may type in the chat. All right, just an important note before we proceed. Whatever we share here today is based on the latest data and also facts. If there is further development, things may change. And we want to make sure that you know we are not a licensed investment advisor. We do not manage customer fund. We're an educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your decision and be able to get better results. If you're looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. As usual, let's start with the market highlights. So what are the factors or events that are affecting the stock market in month of July? So let's take a look on the US trade war first. So as we know, during April, Donald Trump announced the Liberation Day, and from that point onwards, we have the trade deals ongoing throughout the world. Different countries are negotiating with the US. And what are the latest development here? All right, so first, for this month, we managed to have a US-Japan trade deal, whereby the US finally agreed to cut the tariff for Japan to 15%. And in exchange, Japan will invest 550 billion in the US and also open some market access in Japan for US companies. For example, Japan's agreed to major US investment, including Boeing orders, and also they were going to increase the agriculture imports for US agriculture products. And also at the same time, they will provide broader access for US automotive, which means the car companies to have more opportunities in the Japanese market. And while this Japanese deal provided some stability to the market, other countries also model the negotiation models or the trade deals. For example, like South Korea and Philippines are targeting the 15% tariff deal as well. And in exchange, they will have some investment in the US and also do some trade-off with the US. And all these countries currently, the talks are still ongoing. South Korea haven't struck the deal, Philippines haven't struck the deal as well. And another big news for the week, or I would say just happened yesterday, will be the European Union and also US trade deals. So US also agreed to just reduce the tariff to 15% for European Union's product. And in exchange, the European Union will also have some, we're not going to retaliate the US tariff, will not have a retaliation tariff. And they agreed to buy 750 billion in natural gas, oil, and also nuclear fuels. All right, so in exchange, they will buy 750 billion worth of energy products from the US. And at the same time, they also agree that they're going to expand their military acquisition, which means like buy more weapons from the US suppliers, and also at the same time commit 600 billion investment in US economy. All right. However, in the tariff, there are some exemption as well, and also there is some clause as well. For example, the automobiles managed to reduce the US managed to negotiate, and US agrees to reduce the tariff for automobiles for European companies. So all these European automobiles like BMW, Mercedes will enjoy a lower tariff compared to previous level. And there are some exemption case as well. All right, for example, like aircraft parts, semiconductor equipment, and certain chemicals and agricultural products from Europe will have zero tariff in US, and also including some generic pharmaceuticals product. However, the steel and aluminium still maintain at around 50%. So you can see that the deals pattern, how these countries strike the deals, including UK earlier, and also like recently one we have Japan, European Union, and also earlier on I think we also have a few countries like Vietnam also strike a deal. So all of these deals, you can see the similar pattern here. All right, so US, in order to reduce the tariff, they will buy more US products or they may invest more in US. All right, and the last one will be the big one, US-China trade talk or the trade deals. So the trade deals are still ongoing between US and China, and they are planning to extend another 90 days for their trade talk truce. All right, because in the past there has been a lot of tension between US and China. At one point, the tariff go until 100%, which is a crazy level, and it's very hard for business to survive. All right, but however, the truce between US and China managed to provide some stability to the stock market, And now they are having a good progress and they plan to extend another 90 days. And you can see that US also start to show some willingness to negotiate, because you can see that they start to relax some of the export restriction to China. Like for example, recently they've allowed the NVIDIA to sell H20 chips to China again. And also they lift some export ban for all these chip companies as well. For example, AMD now able to export certain GPU to China as well. And this provided some relief rally for the AI stocks as well. And you can see that all these semicon stocks are still very bullish because of all these positive news. So I would say the trade talk deals actually provided some stability to the market. And next major event we have will be the US tech earnings. So as we know, July month will be the tech, I would say the earnings season. And usually when we approach the month end during the earnings season, that will be the tech earnings season. All right, so this week we will have Apple, we will have Amazon, we will have Microsoft to announce their earnings. One of the major techs already announced their earnings, and it's Google. All right, so from Google earnings, what we can learn from this Google earnings, or what we can refer to in this Google earnings about the AI will be Google earnings shown that there are strong cloud demand this quarter for them. All right, so it means that the cloud demand is high, and also at the same time they do see that improving Gemini's, which is their AI app Gemini, monthly active user has been improving. They show that people are going into AI and going into Google's AI as well. And during the earnings, they also mentioned about CAPEX, which is the capital expenditure for this company, the AI CAPEX, which is how much money they invest in AI infrastructure. So in this quarter, they increased it from 75 billion to 85 billion, 10 billion increase. They show that all these big tech companies are still investing heavily in all these AI infrastructure, including GPU, including networking, and so on. So they're investing heavily on all these AI data center hardwares, all right, and also some of the software as well. And other than Google earnings, we also refer to overseas like Taiwan, TSMC, one of the key supplier for all these AI companies, also shown strong earnings, all right. And during their earnings, they also mentioned about strong AI chips demand. So from these few tech earnings, we can see that the investment in AI are still very high, and the demand for AI chips are still there. All right, this provided some support for the AI stocks, and you can see that some rally recently on all these AI stocks, especially those chips company. So this semiconductor chips company. All right, and next one we have the drama between Jerome Powell and also Trump versus Jerome Powell. And how many of you have heard of this feud between Trump and Powell before? You may type in the chat if you heard of this news before. So in the past, as we know, Donald Trump has been having some dispute with Jerome Powell, including some interest rate dispute, personal attack, and also he threatened to fire Jerome Powell in the past. All right, and this caused some volatility to the market. If let's say you are trading actively recently, he's been using the Fed renovation case. He's been launching personal attack to Jerome Powell. He's been talking about Jerome Powell should have cut the interest rate and so on. And this caused some volatility, especially in the treasury market and also the US dollars. All right, but recently things finally settled down as well, because he said that he's not going to fire Jerome Powell. All right, and now the Fed will be in focus, because as we approach month of September, people are looking at Fed that they may cut interest rate for the coming FOMC in September. So in this case, the Fed will be in focus, because the coming decision in the next FOMC, I would say July FOMC likely won't, I would say likely won't cut the rate already. But for September, they may going for a cut. All right, they may go for a cut in September FOMC. And all focus will be on the Fed itself, including all this hoo-ha drama between Trump and Jerome Powell. All right, so as an investor or trader, we may want to monitor the upcoming economic data that going to affect the interest rate. For example, let's say we see that September potentially there will be a cut, then all this August inflation will be an important data point for us to refer to, because as we know, during past month, the inflation rebounded to 2.7%. So whether the next month continue to rebound to higher point or continue to go down, that will be a key influencer or key influence data for the Fed to make the next rate cut decision. But however, we monitor the overall market in the Fed fund futures and also overall view in the market. People are expecting 2 cuts this year, including their own projection in the last FOMC projection. We do see that potentially there are 2 rate cuts in this year, 2025. All right, and next one will be the positive economic data in this month, July. We see that there are strong retail data. So you can see that some retail stocks actually recovered. For example, those over-penalized retail stocks like Nike, we can see that there is strong rebound from Nike. And also some of the retail stock like Estee Lauder also rebounding and trend reversing. All right, so for those that for our students that learn about trend trades, you may also monitor some of these over-penalized stocks that are showing some sign of trend reversal. So what I meant is for this month, we can see that there are some strong retail data and some over-penalized retail stock has been recovering. And also at the same time, we see that US services PMI are still healthy. And also there is still strong jobs data out there. Employment data are still very strong. Jobs market are still very strong in the US economy. So as a result, all this during the month of July, market continued to break new highs. And based on the seasonality pattern later, I'll share that as well. Also, July will be a bullish month. All right. And however, if having said that the market are really crazy, keep breaking new highs, but now it's at a stretch level already, which means at a very high level. And usually the stock market won't go up in a straight line. So we do see that potentially they may have some pullback in near term. All right. Potentially may have some pullback in near term. And the upcoming tech earnings will cause some volatility as well. It could be a bullish factors, it could be a bearish factors as well. Depends on what the company announced. Because this week we're going to have all these big tech companies announce their earnings, for example, like Apple, Microsoft, and also Amazon. All right, so this will be a key earnings for us to monitor, and whether the bull can be sustained or not will be depends on these earnings as well. So investors and traders, I would say now the market is at a high level, and it's time to be patient. All right, it's time to be patient, not to chase after the high, but to be patient to wait for a pullback to a better valuation level. All right, after going through the key highlights, all these events, let's take a look on the big picture of the stock market performance over the 10 years. And let's take a look at the high level chart for all these different indices in the global stock market. All right, first, let's start with the US. So let's start with Nasdaq 100. So Nasdaq 100 track the top 100 tech stock in the US. And let's take a look on S&P 500 also, which is representing the top 500 stocks in the United States. So from the chart here, we can see that after the Liberation Day, when Donald Trump talked about the tariff, things are coming down. However, when he started to pause the tariff and have a talk with different countries, things recovered and the stock market keep breaking new high afterwards. And I would say that all these positive trade talk development actually provided some stability to the market. And also the market started to come out with one term called TACO. All right, TACO, Trump always chicken out. All right, so in this case, I would say once the Liberation Day, then after that, the market crashed and Trump started to hold back a bit and start to have negotiation with these countries. Things are improving, and as we see more and more trade deals between countries, then markets start to stabilize. All right, and also next one will be the recent, like I mentioned, Google earnings and also the TSMC earnings provided some AI stock rally. And all this removal of the on hold of all these export restriction, like example, resume the NVIDIA export of H20 chip to China, resume the export of AMD chip to China, provided some stability to the market as well. And at the same time, with the market looking at potential rate cut, also certain sector that affected by sensitive to interest rate also recovered. So you can see that during these few months, a lot of bullish factors and the stock market keep breaking a new high, and now we already broke above the previous all-time high, and the market continue to find new highs recent days. All right, however, like I mentioned earlier, the market already at a very stretched level, so pullback could be come anytime. All right, so in the stock market won't go up in a straight line, as you can see from the chart here. It always form a higher high and also the higher lows. All right, so in this case, as a trader or investor, it's time for us to practice patience as well, wait for a pullback. However, we won't just simply wait for a pullback doing nothing. So for those of you that have a systematic process to select stocks and have your investment or trading plan, you may look out for potential investment or trading opportunities while waiting for the pullback. You can do your homework upfront, identify all these opportunities and wait it to happen. All right, and then take action. And if you are no other trading style, like for example, swing trade and also intraday trade, you can still trade the stretch level market or more expensive market if you know the right strategy or the right process. All right, and from our view here, the market may pull back after the earnings season because in the past, based on the seasonality, also August, September, and October tends to be a more bearish month. So we will want to monitor further first whether the market pull back to a right support level before we re-enter for a year-end rally. All right, so these are the overview of the US market. And next one will be China. So China recently also have a bull run as well, especially after the GDP data. All right, so their recent GDP data showing at 5.2%, which is above the estimate of 5.1%. And on top of that, the government also do a lot of stimulus action. For example, they have a lot of monetary policy, a lot of fiscal policy to support the economy, and the China stock market did rally as well. And also, they do implement some of the stable coin policy also. After US approved their Genius Act stable coin policy, Hong Kong also approved their stable coin policy, and they said it will be backed by China to experiment it in Hong Kong open market. And this also caused some stablecoin related stocks in Hong Kong and China to rally. However, China's stock market is a volatile stock market. Over the 10 years, you can see that it always rally through a peak, then come down, then go sideways for a long time. All right, and in the Chinese stock market, most of the traders or investors are made up from retail traders, so they are more sensitive to all this sentiment, and it's more immature market. And other than that, China also still have some underlying economic problem. For example, they still have property crisis, property slowdown in China, low inflation in China, and also oversupply issues for their factories in China. So in order to solve this, do you think it's easy for the Chinese government to solve this? You may type in the chat as well. So I would say that with all these economic headwinds and also geopolitical headwinds, plus the stock market are easily influenced by all this Chinese government action. So I would say, unless you're experienced traders, I would say limit your exposure to China market, unless you are experienced trader or investors. All right. However, based on the data, also we can see that in the past, US tends to provide more consistent return. All right, and next will be the Hang Seng Index. Hang Seng Index also have a bull run recently, and usually Hong Kong market affected by both US and also China market because they are the financial hub, one of the financial hub in Asia. And recently it continues its uptrend after more trade certainties. For example, we see a lot of like Japan US deals, all these different Vietnam US deals, all these Asia region trade deals happening, and also there's positive development between US and China in terms of trade deals. So things are getting better in Hang Seng market as well. And recently also, like I mentioned earlier, Hong Kong also approved their stablecoin act. So those related stock rallied as well. Those are stablecoin related stock rallied as well. And I would say Hong Kong market, like I mentioned earlier, also influenced by Chinese market, and it may easily affected by all this uncertainty in trade war. And it also heavily influenced by the China government, hence it's more volatile as well. All right, and also Hong Kong also recently slowed down in the economy as well, affected by the China economy situation, and now also affected by international trade because of the trade war between US and China. All right, so you can see that over the 10 years or so, it has been going sideways most of the time, and it's around 6% return over the 10 years average, and also per year around 0.61%. All right, so I would say that unless you are experienced investor, Hong Kong and China market will be more volatile market and easily influenced by the Chinese government. And lastly will be our FBM KLCI, recently rebounded, but still going sideways, and likely because of still there are uncertainties about the trade deals between US and Malaysia. And Malaysia actually still having the talk with US, but they do stand firm on certain criteria which US want Malaysia to let go of it, but we stand firm. So the trade deal still not yet complete. So let's continue to monitor. All right, the market is still going sideways, so the trade talks likely may influence the market. Trade talk outcome may influence the market direction. So if you are investors in Malaysia, you may also watch out for all these potential trade deal news. However, Malaysia has been earlier on has been in the data center rally as well. As we know, Singapore are invested heavily in AI as well. They want to become one of the top AI country as well. However, they have limited land and also limited power resources and water resources to cool all these data center and build all these data center. Hence, Malaysia as a neighboring country benefited from all of this. But recently, the rally has been going sideways because of the uncertainty in the trade deals. All right, so from the comparison here, which market provide you the most consistent return out of so many different markets? You may type in the chat. And for investors or traders who are looking for high growth, let's say you're looking for high growth, which market will provide you the better returns as well? And also based on the companies or brand names you observe, what companies tend to have, which countries company tends to have high growth and also have stable income and also strong drivers? Let's say, for example, AI, new AI mega trends. So which AI companies that are strong, that are dominating the current market are coming from? All right, you may type in the chat as well. And what are the global names you heard of listed in the US? All right, what are the global companies name you are heard of listed in the US? All right, so from here we can see that the company, based on the data here, also we can see that companies in the US tend to have higher earnings growth and also provide more consistent return or predictable returns in this case. All right, just based on the Liberation Day recovery, we can see that US has been recovering very fast. All right, and like I mentioned earlier, some of you asked about the seasonality. So this is the S&P 500 and also QQQ that represent the Nasdaq 100 ETF seasonality patterns. So these are the 5-year seasonality pattern, and we can see that August, September, and October tends to be a more bearish month. So how we read this data is, if let's say we take a look on July, what does this 100 means is, if let's say we take the percent of, like, let's say the month of July for SPY to close higher than opening of the month, which means that let's say July is starting at this point what are the closing towards the end of month. All right, so from here we can see that for S&P 500, 100% of the time, the market closed higher for month of July over the 5 years data. All right, so that's why I say that July is a bullish month, all right, because of all this earnings season and so on. So July tends to be a positive month, which means that the S&P will close higher from opening of the month. All right, but if we check on, take a look on this data for August, September, and October, things are more bearish. All right, things are more bearish, especially September. Only 25% of the time the market closed higher than early of the month. So as a trader or investor, how we make use of all this data? All right, let's take a look on QQQ first before I summarize it. So for QQQ, also similar pattern. July, 80% of the month closed higher. 80% of the time closed higher for month of July. But you can see that similar pattern happened in August, September, and also October. However, for November, you can see that it always tends to close higher as well. All right, 100% over the 5 years. For November, it closed higher compared to early of the month. So as a trader or investor, how we can capitalize on this data is, there are even the market at a high, I would say now is the time to wait for a pullback. All right, so if you have a proper way to trade, you have a strategy, you have a process, now is the time to patiently wait for a pullback. And as if August, September, and October, you see a strong support form, then you can take opportunities of that. Because overall, I would say based on all these factors I have just shared earlier, potentially markets still have room for a year-end rally if let's say there is a dip in all these August or September or October. So it's time for you to get ready as well. For those that still haven't have a systematic way or a proper trading system, you may take this opportunity to learn now because you have 3 months to wait for the dip. All right, wait for the dip and capitalize on the November rally. All right, and for those already have a systematic way, already have a strategy, you can also consider to, after the earnings season, potentially take some partial profits or potentially secure some cash position and wait for the August, September, or October dip. I don't have a crystal ball. I don't know when the dip will happen, but after the earnings season peak, if let's say there's no further good news to fuel the market to further upside, any bad news may cause the market to come down. All right, so this is something you may take note. This is just a historical data for us to reference. Of course, if you want to do well in the market, you may also need to have a strategy, have a systematic way, have a proper risk management as well. All right, and next one will be the money on the sideline. So as I usually shared, there is still record 7 trillion of cash on the sideline. And where does all this sideline park will be? In the money market funds. And what is a money market funds is it work like our FD. All right, so usually when all these funds having their cash position, usually they will park in all these money market funds to earn interest rate, just like how we treat our extra cash as well. When you have extra cash before you invest in the stock market, we can always park it in our FD, fixed deposit, so that we can earn some interest rate from there as well before we deploy it into the stock market. So same for all these funds as well. All right, all these funds may also park their money in money market funds when they have idling cash. And one of the reasons why investors are stocking up on cash is to take advantage of the high risk-free rate. So as we know, currently the US interest rate is still at 4.5%. So there are still funds parking their money in cash position in the US. All right, so but when things change, let's say for example, when we start to have interest rate cut by the Fed, then they may rotate the money into the stock market or those dividend stocks that are providing higher dividend and so on. All right, so at that point, funds may rotate out from the money market to the stock market or bonds market to secure some of the good yields, good deals, or some of the good returns. All right, and we do see that if let's say September we start to have some rate cut, they may rotate earlier. All right, so all this may rotate to other asset if there is a rate cut in September. All right, so do stay monitor on this as well. And lastly will be what to focus. All right, so as an investor or traders, we also want to focus on the right sector or the right industry. However, before we look for the opportunities, usually we will take a look on the macro risk as well, because most of the time macro move the overall market. All right, so one of it will be the inflation trend. So do monitor the inflation trend in US, Japan, Europe, and also China, because this will affect the overall monetary policy from different central banks. For example, tariffs are expected to raise inflation, so upcoming US inflations are important. And based on the global investment banks view also, recession is unlikely, but growth may be slowed down due to the tariff. All right, so these are from economists, from all these financial investment banks. But as traders, we also need to follow the technical charts and also based on the company's fundamental and also overall industry trend as well. So these are some macro risks to take note only. And next one will be geopolitical tension. So as we know, tariff uncertainty are still there. But recently, based on the trade deals, positive development, things are improving. So these risks are dropping. All right, all these geopolitical risks are dropping. And geopolitical tension, like for example, war in the Middle East, war in the Europe, also easing. All right, start to slow down. All right, things are settling down. So things are getting stable for the geopolitical side. And however, US and China tech war likely will be still there. I would say next coming few years will be between these two countries in terms of technological war. So any China tech development, especially from Huawei or SMIC or all this breakthrough in AI or semiconductor may cause concern for US tech growth. All right, so do watch out for this risk as well, because if let's say, for example, the DeepSeek event early this year, you can see that it caused some profit taking or caused some pullback in the US AI stocks, because these are quite sensitive to the US company growth. If let's say China managed to come out with a strong GPU that able to compete with NVIDIA, then this may cause the NVIDIA growth to slow down and it may cause some profit taking in NVIDIA stocks. So these are important factors, especially the China tech development side. All right, so as an investor, we may want to take note on that. And next one with the political risk. So like I mentioned earlier, Trump and Powell feud. So these two are having some dispute here and there and some drama here and there, and it caused some volatility to the market. But I would say this one, over time, it could be stabilized and it will be short term, likely will be short term, because you can see that Trump U-turn very fast usually. After he said he want to fire Powell, at the same day, during lunch hour, he just said he won't fire Powell anymore. So from here, we can see that time to time, we may come across this political risk that cause short-term pullback or short-term volatility in the market. And after going through all the risks, potential risks we have, let's take a look at opportunities. What are the opportunities out there and what are the industries we can focus on? So for example, AI adoption, like I mentioned earlier, still driving the demand. So a lot of companies are adopting AI. We are moving from the large language model to agentic AI stage. So more and more companies deploy agentic AI, which means that they run multiple models behind that agent, an AI agent that automates stuff for the company or at a personal level. So with this agentic AI trends, it increased the inference demand, reasoning demand with AI. All right, so in this case, this also demand huge memory, especially the high-speed memory. Hence, you can see that all these memory company, like for example, all this Seagate, Western Digital, all this Micron has been rallying. The stock has been going up. All right, and at the same time, Google earnings also show expanding capex. So upcoming earnings also important for traders. You may monitor their earnings, whether all these companies are continue to spending money on AI or not. For example, like Amazon, Microsoft, and also Meta, whether they are still spending big money on AI. So all this may continue to drive the AI demand. And at the same time, based on the TSMC earnings, also we see that strong AI demand, strong AI chip demand still there. And at the same time, we do start to see sovereign AI. So what is the sovereign AI will be all these countries' government that adopting the AI. For example, America recently come out with an America's AI action plan and has been signed by Donald Trump as well. So they are going to compete against China in terms of AI as well. And China also aware of that, and they also competing in terms of AI technology as well. And you can see different countries like Singapore, Saudi Arab, UAE, all of them are investing in AI as well. Taiwan also investing in sovereign AI as well. So you can see government also move into AI, military also move into AI. Hence the demand will likely be still there. And whichever country dominate the AI space or win the AI wars, I would say it will be the next superpower as well, or continue to be the next superpower. All right, hence the demand for AI is still very, very important. And you can see that US also pressuring TSMC to move factories to the US in order to secure their own supply chain. All right, in order to secure their own supply chain. And next one will be the Genius Act, which is the stable coin law, has been signed into law recently in US, passed the House, passed the Senate, passed the President, and now has been signed into the law already. And also we have the One Big Beautiful Bill, spending bill by the US. And what are the key factors that are affecting the stock market for this few act will be financial deregulation and also fintech. So why I said these two are benefited from these two, because with deregulation, we can see more and more fintech and all these stable coins brokers start to be recognized by the US SEC or start to listed in the US. And this may cause some rally in the financial market, financial industry, or the fintech industry. All right, and potential rate cut in September also benefits some interest rate sensitive industry and sector. For example, like the home builders, the retails has been penalized over the past few years because of high interest rate. Because when you have high interest rate, mortgage rate tend to be high, and the housing demand tends to lower because of higher mortgage rate. And with potential rate cut, mortgage rate likely will be dropped and the demand might be improved. However, for the home builder sector, there's still a lot of headwinds. For example, all these immigrant policies still affecting their supply. And also at the same time, all these certain states are still lack of some labor, especially with Donald Trump immigrant policy. They are very strict on all these foreign workers. So you may also monitor the housing market. There are tailwinds, there are headwinds as well. There are pros and cons in this sector. And for retails, when people can secure more cheaper loan or cheaper credit card interest rate, then people may spend more on discretionary item. So discretionary may recover as well, especially for the retail side. And lastly will be the one big beautiful bill, like I mentioned earlier, become a law. So what are the key focus of this spending bill will be AI. So AI, like I mentioned earlier, still high demand. So now government also focus on AI. Then defense. So military also focus on AI now, focus on drone technology now, focus on missile technology now. All right, so these are key drivers for certain semicon or defense contractor industry. And for financial will be the brokers and also fintech. All right, so with deregulation, brokers likely benefit, and also fintech companies will benefit from this deregulation as well. And lastly will be, you can see that from all these trade deals, so many trade deals, a lot of countries, they're willing to invest in US now. All right, so in order to get cheaper, lower tariff, in exchange, these countries are investing in US. For example, Japan just signed a 550 billion deals to US, including Boeing. So Boeing are under industrial sectors, all right, and some of the companies agree to build factories in US, and building factories requires industrial equipment as well. So all of these are opportunities in the market, all right, opportunity in the market. All right, and since this is just a 30-minute market update, it's very long topic if we talk everything here. So we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic, versatile, and safe way. Like I mentioned earlier, based on the seasonality pattern, we may have a pullback, all right? And this is the best time for you to learn if you haven't done so, because while waiting for the pullback, you can have time to build the skill set yourself. And we have the most systematic course in the market, including process step for every single trading style. And we have versatile strategies to handle all different market conditions. And we have a safe approach with proper risk management. And now is the best time for you to learn a systematic way to trade or invest in order to capitalize on the upcoming pullback based on the seasonal pattern. All right, and of course, when you learn, you need to plan some time to practice and also pick up the skill set while waiting for the opportunities to happen. And get yourself ready when the opportunity comes. All right, so April, we have a lot of opportunity. May, we have a lot of recovery. So April, we have a lot of opportunity. Then now we see that market at the high, which is not the right time to go in as well. So while waiting for the pullback, you can actually learn up the skills, learn up the process, so you can capitalize against when the opportunity come again. And also we have a hybrid class for the workshop. We have face-to-face and also online. So do join the 3-hour webinar to find out. The next available webinar will be on tomorrow, 29th July, 2 p.m. All right, you can scan the QR code to register. All right, and other than the 3-hour webinar, for our students, for our existing students, if let's say you are willing to learn about trends and also major macro factors that are affecting the stock market, like I mentioned earlier, 40% of the time, the market are affected by macro factors. For example, like how the money supply and how the money flow and how the monetary policy affect the stock market, and how US, all these fiscal policy, US politics affecting the stock market. And of course, relationship between different markets and also asset, like for example, stock, currency, cryptocurrency, and bond and as well. And also, like I mentioned, from the update, you can see that a lot of opportunities in different industry. For example, AI affects semicon industry, software industry, and also fintech industry. So all these industries have their own supply chain, and also what are the upcoming opportunities in these industries as well. Of course, we will also cover how to screen and analyze all the different emerging stocks. And as an investor, of course, you may also want to understand more about the growth potential of a company or analyze the risk of a company. All right, so these are all under our Insights Mastery series, and our next industry insight booster will be covering brokers. All right, brokers, which is part of the fintech. And for those of you that monitoring the brokers, you can see that brokers has been doing well recently as well. Those brokers, stock brokers industry has been doing well, and fintech stock has been doing well as well. In September, we are going to have the most important FOMC as well. Like I mentioned earlier, the rate cut. So people are anticipating interest rate cut there. So with the interest rate cut, then how the funds will rotate, things will change again, because in the past it's been on a high interest rate for a while already. So when we start to have an interest rate cut, funds may rotate again, money will rotate again. So it's a very important macro insight booster. So for those that is our student, if you're interested, you can scan the QR code to understand further, or just fill in the survey, so we can know that whether you're interested on all these different option of courses as well. All right, and if you find this market update is beneficial to you, do recommend it to your friends. And now I'll open the floor for Q&A. So any questions in the chat just now? Moderator, any question in the chat just now? All right, so are we seeing any foreign manufacturing company relocating or expanding production in the US in line with Trump's reshoring agenda? All right, so I would say it depends on what type of manufacturing you are doing. All right, so for example, let's say wafer fab. Wafer fab requires less labor but a lot of automation. All right, for example, like all these AI chip producing factories. So TSMC has been moving their plant to US as well to diversify the supply chain. So you can see that Donald Trump's policy actually managed to pressure some of these companies to move their manufacturing to the US. All right, and for those semiconductor with a lot of automation one, things are more feasible. All right, because all these are expensive items, high profit margin, so you still can afford to move the plant to US. And the company management, of course, will review the cost between tariff versus moving the whole plant. And in order to secure more deals with the US and secure more relationship between the US companies, like for example, NVIDIA and TSMC, so NVIDIA will agree to invest more in US under the Donald Trump policy. So they will also ask their supplier to move to US. And in order to secure the business, continue the business with NVIDIA, TSMC may also move their plant to US. So this is a part of the observation I see. However, like for example, let's say you are building like iPhone. All right, iPhone is you need a lot of skilled labor to tighten the screw, and also you need a very complicated mechanical supply chain. For example, all these complicated screw produced to assemble iPhone need to go through a very detailed manufacturing process as well. And in China, the supply chain already built up. So for Apple to move all the way to US, it will incur a lot of cost, and also supply chain wise is impossible because a lot of things are manual work to assemble an iPhone. Even though we have automation nowadays, but if you take a look on all these videos that showing you how China assemble the iPhone, it's still quite a very manual stage. And if let's say Apple invest a lot of automation in this part, it will incur a lot of cost for iPhone because every generation of iPhone, the assembly could be different. So things are different from electronic manufacturing like assembly compared to semiconductor. So it will be depends on which type of manufacturing, but we can see that most of the companies start to move to US. For example, like automobile, in order to sell more car in US, you need to set up factory. All right, and for semicon, like in order to secure that one is for US, in order to secure their own supply chain for AI chip, in case anything happen to Taiwan, it's a must. The move is a must. So they also move for national security purpose. So we can see that depends on industry. All right, so not every single manufacturing will move there, but depends on the cost between tariff and also the manufacturing cost. All right, for example, let's say the tariff 100%, then factories of course may move to US because the tariff is too high. But if let's say a 15% or 10%, then they may consider to absorb the tariff. So I do see that some manufacturing in Malaysia also, US company that doing that also is considering between absorbing the cost or move the factory in US or move some of the line back to US. All right, so it depends on company. All right, and next one will be, could increasing institutional investment in cryptocurrency trigger some capital rotation away from traditional stock? How might that impact stock market performance? All right, so there's a competition between all these blockchain type of asset like cryptocurrencies versus stock market. So I would say, for me personally, I'm not a major trader or investor in cryptocurrency. So I would say, if you compare cryptocurrency versus stock are companies, and companies still have growth, still have valuations, and it's a business. All right, so things are more predictable for all these different stocks. All right, because they are all companies, and you can have their company fundamental, company financial report, annual reports, and they are regulated by SC in US, Security Commission in US. So as an investor or traders, I would say, if let's say you're an investor for long term, stock is a no-brainer, it's a very good asset. And also as a traders, if you prefer more stability or more consistency in your account, not so volatile in your account, stock also tends to be more stable and more predictable. All right, and if you compare to cryptocurrencies like Ethereum backed by different projects, Solana backed by different projects, Bitcoin also different. All right, so all these have different technology behind. And if you go into the cryptocurrency world, there are thousands of different cryptocurrency backed by different projects. So it's a much more complicated world, and things are more volatile because some of the cryptocurrency may go zero. All right, and some may be a scam also. So this may be more complicated, and certain countries are not regulated yet. And now it's just step one. We start to see countries start to have law for all these cryptocurrencies. So I would say, yes, that may cause some move from different assets, but all these stock market still will be, I would say, most of the pension funds, most of the institutional funds may still prefer stock market or more predictable asset rather than going into somewhere that are much more volatile. All right, so I would say stock market will still have their demand, and I would say the impact will be minimal unless things change in the future. All right, so for now, I would say stock market still the better asset or more preferred asset. All right, and next one, US technology sector valuation is very high, but Hong Kong is still low. All right, so which technology stock has more upside opportunity? All right, so like I mentioned earlier, in US, yes, the valuation is now high because people are factoring in like valuation, like some even go until 4-5 years later already. But you may want to evaluate between the market share as well. So in US, you can see that NVIDIA, AMD has been dominating the chip market. And Hong Kong, yeah, tech sector, despite they are having low valuation, there are a lot of political headwinds because like US, they can sell to the world because of currently they are having the world fastest AI chip. They are having the I would say the best semicon data nodes, process node, and so on. So they're having a dominating position, and people willing pay a premium for this company. If you compare to Hong Kong sector, yes, some stocks are very good now, very cheap valuation, very attractive valuation now. So you, as an investor, you can actually diversify some to Hong Kong. But I would say, if let's say you want a higher growth or more trade, more volumes or more stable market, I would say still the US. But if you go to Hong Kong market, then you may need to be more selective, because certain stock, even though they are great companies, but now they are affecting by the geopolitical side. They cannot sell to US, or they cannot access the US market, and so on. They can only access to all these Southeast Asia market or European market also may not be accessible to them because of all these politics there, geopolitical issue there. So as we know, US are the world largest consumer market, and Europe is the second largest in terms of the union, and China are third. So Hong Kong stocks have this challenge whereby a lot of headwinds. They cannot sell some product, they cannot sell to the US, cannot sell to Europe, hence limited their revenue growth. As compared to the US, they can sell to own country, they can sell to Europe, they can sell to the whole world. All right, and people willing to pay for the premium. And sometimes we may see that cheap come for a reason, because things doesn't, good things does never come cheap. So you may also want to consider whether, okay, so if you compare the revenue, potential revenue growth or market, which companies or which type of stock market is better for now. All right, but of course, there are still good stock in Hong Kong market. And if let's say you find any good opportunity in Hong Kong, of course, you can still invest or trade in Hong Kong market as well. All right, and then, okay, last one. All right, so beside AI and finance sector, which industry or sector will have another potential to the upside once the pullback happen? All right, so for now, what I see is AI is one of the strong one, and also finance sector. And other industries, I would say you may also check on all these over penalized industry early on with very low valuation now. For example, like home builders, retail has been showing good valuation, but there are still a lot of headwinds there. All right, they are still much more choppy there. So as an investor, you can diversify across AI, then some fintech, then of course some of the over penalized stock with low valuation that's showing some recovery. All right, so you can diversify to that. All right, so with that, I believe I answered a lot of questions already, and I hope that you find this market update is beneficial to you. And if you find it's good, then you can do recommend it to your friends as well. Thank you, everyone, and see you again in next month.